Hello everyone, welcome to another session on dollar INR. We have seen massive amount of volatility in the exchange rate dollar INR in the last 3 working days. Unfortunately this week we had 2 holidays. Yesterday and day before yesterday was non-working days. But because of that, there were a lot of uncertainty in the Middle East. War is still continuing. Crude prices are going high. Trump is making a lot of contradictory statements, sometimes peace, sometimes more war. And addition to that is the regulatory change that RBI is making, and the dollar INR, because of all of this, is witnessing massive amount of volatility. Okay. Now I want to zoom in and show you one particular phenomena what has happened in the last 3 working days. Okay, Friday, Monday. Friday means last Friday, Monday, and today. Okay, so on last Friday, dollar INR opened at 94.16 and intraday it went high and closed at 94.85. Okay, so that was Friday, just before the last weekend, and RBI came in with a regulatory change about on banks open overnight positions. Okay, they limited it to 100 million only, and because of that change, on Monday, Rupee opened very strong and it opened at 93.59. Okay, let me just clean this up. I'll show it to you again. It opened here at 93.59 on this day. This is Monday, this particular candle. But intraday, it went substantially higher and closed at 95. It went as high as 95.22, but closed at 94.83. So that was Monday phenomena. And then again yesterday night, RBI came up with another regulation about trading in the non-deliverable forward markets, the NDF markets. Again, very strong Rupee opening. Monday closing 94.83. Today it opened at 93.53 at this level. And throughout the day, we saw dollar selling happening because wanted to close their positions, in line with the latest regulation change. Okay, and they had to close their positions. So there was a heavy amount of position squaring by the banks. Obviously, no one wanted to go on and carry the positions over the long weekend. It's Good Friday tomorrow. It's a holiday tomorrow. So everyone wanted, all banks wanted to close their positions, and we saw heavy amount of dollar selling, which got the currency as low as 92.82 today, but then ultimately closed at 93.10. Okay, so huge amount of volatility in the last 3 working days, and RBI making a lot of regulatory change is a very clear-cut indication that they are not going to stay on the sidelines when the currency is witnessing such degree of extreme volatility because of geopolitical concerns, because geopolitical actions, war, which obviously is beyond RBI's and India's control. Okay, so that is on the onshore chart, dollar INR onshore chart, just 3 working days, 2 days holidays, and then obviously last weekend. Now let me try and see on the offshore chart, the 24-hour offshore chart. We have been following this chart, very clear-cut, uptrend that we are seeing here, very clear-cut uptrend, higher highs and higher lows. But then again, as I zoomed in here, what I showed you in the previous chart, but this is offshore, so this will have all those non-working days in India, but globally it was trading. So we saw this big change happening from 95.22, it came to 93 levels, so almost a 2 rupees strengthening, primarily because of regulatory change that the RBI did. Okay, so if you look at the chart, the prices broke above the upper trend line of this, a linear regression channel, and it has now come back within the channel. Okay, and if you notice this orange line, okay, this orange line is the 25-day SMA, and we have seen in history that it is a good indicator of support levels. So the prices have just stopped near the orange line, which is at 92.77. Today's low was 92.82. Okay, so orange line, which is the 25-day moving average, continues to act as a good support indicator. So all importers should certainly look to hedge your liabilities at levels around 93. 92, 80 to 93 are very good levels for importers to hedge, because crude prices have again gone higher. Trump is indicating continuation of war, so the geopolitical worries continue, and as long as crude is higher beyond 100, rupee will face the pressure. RBI is making a lot of more changes, policy changes that will have short-term impact, but I don't think that will set the trend until unless the crude price cools off. Okay, so 92, 80, 93 are excellent levels for dollar importers to hedge. Hedge using forwards. Majority of hedges should be forwards. You can also use some vanilla options to get flexibility. Okay, now for dollar exporters, you have been riding this trend. You have been getting good amount of gains because of the weakness of the rupee. You can hold on for a while. As long as crude is above 100, rupee will face the pressure. But one thing is clear, that if you get levels around this region, which is 94, 95, then you should resume your hedging. Okay, you can hold on for a while, wait for 94, 95 and resume your hedging, because you would need to get some degree of protection. Okay, so you do your hedges at 94, 95, do some forwards, but for dollar exporters, some forwards and a majority of vanilla options. Okay, you want to participate if rupee continues to weaken, which it looks like as long as the war continues, rupee will tend to weaken. So if that continues to happen, vanilla options will work in your favor. Okay, so dollar exporters, some forwards and majority of vanilla options. Okay, so that is it from my side. Have a great long weekend ahead.